Hey, everybody, want to welcome everybody out to the AgriSompo March 31st Prospective Acreage Report. I'm Brooks York, joined with Dan Potts. Dan, tell us where you're broadcasting from today.
Hey, Brooks, glad to be on here. Somewhat of a long-time listener, first-time caller feel for me today, but coming live out of Henderson County, Illinois, in a great little town called Biggsville. It's where we've been for some years on our 100-year-old family farm.
So, in a line that Bob Uecker said in Major League, he's not the best color guy they don't call him the best color guy in the game for nothing. So Dan's here. He's going to engineer our way through the report. Dan, you've got the countdown on your end. How many minutes and seconds are we out?
14:25 right now. It's exciting.
This report, it always kind of gets me nerved up. It's the second most important report of the year, in my opinion, for market movement. Maybe not for data. It seems like the private industry's kind of already given us a sneak peek. We've had the Ag Outlook Committee throw out prospective acres, so there's probably not much here that is going to surprise the market in regards to the true numbers that come out. We've got some high ones. I'm going to share my screen. We're going to talk about some things, Dan, leading into this that I think we probably need to take a look at. I guess first off, though, I'm going to back up just a bit. Let me get in the presentation mode here and talk about some things that might be on your radar, not related to the report, the ECAP dollars that are out there at the FSA offices. You may want to go in and get those. We've got an August 15th deadline to sign up. The numbers that we've gone over are on the screen right now. You can go in, get a printout from FSA, get signed up. Onto President Biden's desk at the time, you're going to get 85% of the numbers on the far right column for the acreage that you planned in 2024. If you don't get into the FSA, don't sweat it. They're going to be mailed out at some point in time for you to get. Now, on with the show. Dan, taking a look at this template. First off, we've got stocks at the top. Now, most people tuned in to talk about plantings, but when we talk about stocks, we're 30 days behind. Kind of explain the process in those stocks.
Yeah, so we're going to be looking at the report today, but we're going to be looking at what's available as of March 1st. So we're on a 30-day delay for those. So we'll be looking a little bit in the rearview mirror as we see the numbers come out here in 12 minutes and 20 seconds.
So March 31st report goes back to March 1st, just like our January 10th report did on December 1st. Dan, you don't happen to have those numbers from those.
One billion bushels. Soybeans then followed up with 3.1 billion bushels and a wheat crop of 1.57 bushels, up about 10% from a year ago on the wheat crop, which is going to be an interesting call for me on the wheat today.
Yeah. So if you take a look at where our trade estimates are at, 8.15 is kind of where we're at on corn. You can see the range of estimate 0.05 to 8.31. Soybeans 1.901. The trade guess there 1.823, 2.01, and wheat 1.21. And again, we're putting all five classes of wheat together. This is a really tough one. We know where we're a little bit tighter in the durum and spring wheat market. We make up for in hard red and soft red wheats. So 1.21 is the number. When we take a look at the acreage down below, it is what it is. We'll kind of go through this range very quickly before we look at what's happening in the world and what may impact it. So many times, Dan, we see these numbers, and it's actually not the number that moves the market. It's something bigger than the numbers. And if it's one thing bigger today, it's probably going to be world stocks. But let's take a look at these acreage estimates before we go there. 94.361 billion. Dan, what's your take on that? You sit right in the middle of the heart of where this change is going to occur. And when I say change, I'm talking about an increase in corn acres. Does this report have any impact on what your neighbors are going to plant in Biggsville, Illinois?
Seldom do I see our local crew change intentions from the report. However, I do see tons of demand for corn, and this may be the year for, some corn on corn acres to go in the ground. But curious to see, feeling like we might come in a little higher than that average trade estimate.
Something that's going to play into corn, unrelated to anything that we see here, and I'm going to mention it really quick. You talked about demand. We've got something in the markets right now, and I'm going to call it the snake in the grass. United States Trade Representative a year ago, April 17th, opened up a Section 301 investigation into Chinese shipbuilding. And you say, what in the heck does Chinese shipbuilding have to do with an acreage report? Nothing, but it does have to do something with demand and potentially stocks. What it's done and I say this is bipartisan. It's not bipartisan, but essentially that was under the Biden administration, and there were several complaints filed by several American unions as to some unfair shipbuilding advantages in China. 70% of the world's freight vessels are now being built in China. And that concerns the United States from a trade perspective, from a national security perspective. Almost half of the vessels that we're going to load our commodities on are Chinese owned, and so there's a look in to see if this is something that we need to take action on. And typically, those types of investigations, and within a year, which will be April 17th coming up, we make a decision or we punt down the road to put this more into the spotlight. We've kind of in this new executive order realm under the Trump administration. And I think the administration sees this too as something they need to look into. And so there's rumors out there of an additional $1 million fee for a Chinese vessel to load, unload at a United States port. And what that means for us, if we boil that down, Dan, that's about $8 per metric ton. If you want to talk in corn language, it's about 20 cents a bushel. And so what's happening right now is because of the unknowns, that freight trade is primarily occurring in the nearby months. And so I think if there is a positive from this, it is that both importers, exporters want to expedite some of these purchases and sales to try to beat anything that might be coming down the line because it's going to hinder both sides. So that may play into the stock side of things. Now, when we look at soybean numbers, I'm going to transition now back to acres. We see these soybean acres down a little bit, 83.76, the range 82.5 to 85.5. By the numbers, Dan, in talking to agents and talking to farmers, what are you seeing as far as economics in corn and beans? Does it favor more corn in the United States? Where are beans, where they play out at here from an economic standpoint?
Yeah, I think the opportunity and the fun is in corn, and I think the stable, not so fun planting of soybeans and just how hardy they are plays maybe to the safety side of it. So, if I was to put over under on it, I'm going to say under on the average trade estimate on this as well. But I think the excitement, obviously, in where we're located is the corn market and getting some corn acres in those soybeans. To your point with some of those early plantings out there, some people have already dedicated that ground for better bushels getting in a little early.
We talked about it earlier. We can see all the spread ratios in regards to price, but unless a farmer takes that action, I don't know if it's really going to impact plantings that much. You might kind of explain that if you don't lock in that ratio, you're not guaranteed that ratio will be there when you harvest.
So can you pour a little bit more knowledge on that ratio?
So
Corn and bean
traditionally,
ratio, yeah.
yeah, traditionally what we've looked at is a price ratio. And we've looked at that price ratio at about a 2.4 to 1 number.
Mm-hmm.
So basically we take corn, we multiply it by 2.4, you're gonna get pretty close to where beans should be. We're not seeing that right now. It's gotten a little bit better over the last month, and that's what happens. It generally corrects itself because we've got competing proteins on the world market. And if you kind of think about it, the big picture, if you're a, if you're a ration, if you manage rations for one of the big feeding companies in the U.S., you're going to look for the cheapest protein units you can get, whatever that comes from, if they're logistically available. And so it corrects itself a little bit over time. I would suspect if we lean heavy towards corn, that ratio will slowly correct itself between now and the fall.
Brooks, another thought here on these is we have somewhat of a historical event in my world anyway, with when we track February's average for our crop insurance prices. I don't recall a time when December corn hit a high in February. You think that's influencing acres? And then right away after that, tariff conversation with a fallout on price. So interesting time for corn prices for sure.
Well, I think whether it impacts acres or not, I don't know, it certainly impacts what kind of crop insurance we took. We
For
saw
sure.
it kind of blow up there towards the end. And I think it was really because we had some really good numbers in early February, and then they fell off pretty hard in the last week. I think that impacted people's decision. Whether it impacts acres or not, I don't know. And again, if you don't lock those in, there's not that guaranteed advantage for corn. Weather, in my opinion, we kind of talked about it earlier, may have a bigger final say in these things than anything else. I'm not going to go through the wheat on here because you can kind of take a look at those. We'll have those up as Dan gives us the release. I am going to talk about this because this is a change that is really occurred on soybeans over the last 30 to 60 days. And while this is kind of a busy chart on here, we look at cotton, soybeans, and corn worldwide. We are anticipating a decrease in overall stocks in 25-26. Of course, that's the crop that we're planting right now. It's not significant. Well, it's not insignificant, I guess is the best way to say it. 2 to 3% decrease in soybeans, where we thought maybe 60 days ago with that big Brazilian crop, 6.5 billion is what some people estimated it at, that we were going to grow global stocks. And Dan, something peculiar is happening in soybeans, and I'm going to get to that in a second if we've got time. Let's start with wheat, though.
2.5 minutes out from report.
Okay,
So yeah.
we're going to hustle. Wheat world balance sheet. If you take a look at this bottom, nothing else but the bottom, we look at stocks to use ratio. We're seeing a slight decline in world wheat stocks. I think that's going to be key in what the market does over the next 60 days, combined with the fact that speculators are short. U.S. wheat, you see it starting to come down here too, from the mid 40s, 53 back in the glutton years, 37% there. We're going to forget Chinese wheat because we don't know what China's got. Corn, interestingly enough, you're going to see this 23% stocks to use ratio in the world, the lowest stocks to use we've had in a while. I think that can weigh heavier than anything the market throws at us. The U.S., it's estimated to grow a little bit. Of course, that has to do with acreage. Getting to what I want to talk about, world soybean supplies. For the first time, we're starting to tick those estimates a little bit lower, from a 30% stocks to use ratio down to 28%. I think this is the biggest fundamental change we've seen over the last 60 days. We haven't seen the bean market really rally because of it. If you combine this, maybe, Dan, with what you're talking about, a decrease in those soybean acres, we may have a good catalyst today. So I'm going to go back up because I know we're on the cusp of this thing releasing, and kind of get back to the report estimates. And I'm away from my chat screen. So Ashley, if you or Katie see anything come across there that I need to know about, let me know. And Dan, why don't you you've got your screen pulled up. You got the countdown coming on. What are we at right now?
We are 55 seconds away.
I don't want to count now. So I'm already nervous. So as we go into this, we're not going to focus so much on a market reaction. I'm going to give you one within 30 seconds. We're going to focus on these numbers. So many times these days, the market reacts with a lot of volatility in the first 5 minutes, and then settles down or up, off of where these initial reactions are right after the report. So we're going to focus on the numbers as they come out. I'll give you some market updates along the way.
So we're in this exciting report. We're going to try to remain non-emotional.
We're going to
I'm
try
already
to.
on like
I'm
3
already
cups of
right
coffee.
now. I'm starting to shake a little bit right now.
All right, here we go. We're at the countdown. Here comes reports. All right. Plantings report first, Brooks, or you want to
Let's
go
do it.
stocks?
Going to focus on corn while Dan pulls this up. 94 is kind of the magic number on here. That's where the Ag Outlook Committee was at. 92.5, 96.6 is the estimate. What you got for us, man?
We got 95.3 million acres.
So we're that's one of the top quarter of the guesses.
Mm-hmm.
Um, so that's got to be a fairly bearish number on corn. Again, we're not necessarily going to look at corn at the moment.
Yeah, not too
Soybeans, Dan.
surprising. You ready for this one? 83.5.
So a little
Down
lower on
4 from
soybeans.
last year. Yeah.
Yeah. So 84 was the Ag Forum guess. We've taken off of 500,000 acres of soybeans. This is really going to be really interesting to see how the market reacts. You've probably got a wheat number for us too. Let's touch on that.
45.4 million, down 2 from 24.
Okay. This
45.4.
wheat looks like it could be the catalyst for us. It's going to be very tough for these commodities to go in different directions. Let's recap those very quickly before we move on to stocks. 94.361 was the number, Dan. USDA says what?
95.3 million.
Soybeans, 83.7 was the number.
83.5 from the USDA.
And wheat, 46.475.
45.4. Probably the
Okay.
most exciting piece there.
It
And
is.
early season NDVI looks like a big wheat crop for the U.S. coming on too. So maybe some opportunities.
Let's look at corn stocks. We were guessing 8.151 billion. What have you got for us, Dan?
I have got positions 24, got 12.1. Let me look at another download here. So we come in. So we have got 8.15 billion on
Right
corn,
on the money.
down 2%.
They
Right on. Wow,
they
that's the
nailed it. Interesting that USDA, March 23, we're taking those stocks lower. Now we've kind of already made this adjustment. We just showed that in some of those supply and demand and stocks to use ratios. How about soybeans at 1.901 billion is the number to beat? Where are we at
another
there?
another bullseye, 1.91 billion. That's up
So
4 from March.
a little snoozer there. Wheat, 1.215 billion.
1.24 billion. So maybe a little bit of some
That's kind of
tempering our previous planting.
so pretty much on the nose on stocks
Mm-hmm.
overall. So I wish I had a fillable chart out here, Dan, that we could kind of take a look at things. Let me. I'm gonna hop off for just a second and get a market update. I'm
Yep.
gonna leave you with the crowd to kind of maybe talk about some see what we've got here.
Yeah, so not many surprises by any means on the stocks piece. I think that was kind of expected. I think the planting reports there may be the most beneficial today. And again, not very many surprises on that one. Again, with probably the biggest one with uh, the wheat
And
planting
initial
report.
reaction, really, really disappointing. I
Yeah.
expected us to have something bigger and better. Market's fairly quiet. Corn,
I'm 10 minutes behind. Did you get live today?
I got live, yeah. Beans up a fraction, up 6 cents. That's where we're at as of 11:03 and a half. So not a lot to report, which shocks me. I thought there would be a move. Again, it almost takes the market a little bit of time to digest this type of information. Um, through the end of the day. All in all, we found some corn.
Lost you there for a second, Brooks. Looks like you're might be catching up with us with some internet issues.
think I'm back. I'm on a Starlink connection. Sometimes it resets, but I
You're
think
back. Thank you.
scratching its head a bit on where we find these acres. We kind of know in the South, tough times on cotton. Every day I do the markets, and I just feel for the cotton producer down there with the high expenses that go in, and it's like a market that won't move. Obviously, I think we've probably taken the cotton acres lower and added to the corn specifically, but the bean number wasn't quite as low as maybe what I thought it could be. So interesting look today. I want to go back to something though, because I didn't get the time to spend on it on my end. If you can still see my screen, which I
We can still see you. Yep.
can. Okay.
Yep.
Let's see if I can advance a slide. To me, the environment is changing based more on this than anything else, and this being world stocks. Last year, Dan, it was a complete disappointment when we got to May, June, and July. Every producer was looking for an opportunity to market corn and beans, and we didn't have them. I think this sets the stage for us to have opportunity. One important caveat that I see here, and I'm looking at these beans because remember, this was not forecasted in the market over the last few years. When you take a look at 23, 24, and then all of a sudden we got a reduction in stocks in 25. There's something that's happening in this market that I want to point out. So when we take a look at where Brazil's at versus the U.S. Typically, short Brazil crop means that we export beans sooner in the calendar year. Big Brazil crop means we export our beans later. It was a big Brazil crop. We know that. We don't know how big. I mentioned the estimate of 6.5 billion, and some people even said higher than that for their production this year. Something's showing possibly a different sign. Our beans in the U.S. and Brazil beans are essentially the same price on the world market in the last half of August. That would signal one or two things, Dan. Either that Brazil crop wasn't quite as big as we thought, or the demand is greater. Based on that stocks number that you had out there, I thought maybe we might have a reduction in soybean stocks in the United States to show maybe that greater demand, but maybe that Brazil crop wasn't as big as what we thought. Because if we can get our beans back on the marketplace in last half August versus South American beans, that is a huge, huge deal for American farmers, both in basis for early harvest, the tail end of old crop. And so I think this paints the picture that this May, June, and July, we're going to see some opportunities that we did not see last year.
Beans especially, right? That's primarily where you're focused on.
Beans especially, but it's a domino effect. It's very uncommon for us to be super bullish one commodity, super bearish. Out that template so that you guys can kind of see where everything landed. And if you're an AgriSompo employee listening, we'll forward out some information that if you'd like to send on to your agents, you're more than happy to do that. But with that, I want to thank our crew at AgriSompo behind the scenes, Katie and Ashley. And Dan, you're going to have to get a handle or a nickname if you're going to be the color guy in these broadcasts. Downtown Dan Potts, maybe that's what it is. I don't know.
I don't know about that. We'll see. Maybe it's given by the people on the call. We'll see how things go.
That's right. Yeah. Well, I appreciate everybody joining us. Have a great Monday, and we'll see how these markets close today.
Thanks all.